Hello, everyone, and welcome to another edition of Coffee and Real Estate Live Chat. I'm your host, Robert Whiteline, and this is the pre-show. Just getting things ready. There have been a few changes. There have been some software updates, some changes in how things happen. So I'm just making sure everything is cool and copacetic, because we all know that doesn't always pay off, right? So what we're doing right now is just sort of confirming that everything is running as it should. So far, it looks good. The chat is up, so feel free to join in. I hope all of you are having a great season here. The news we're going to share today is a continuation, right? So those of you who have come along with me on this journey of doing this monthly coffee and real estate know that the last few months have been kind of a shocker in terms of the reversal of the markets, and we'll see that continuing, right? So a lot of the predictions I made early on are still happening. How you doing? And as I said, my name's Robert Whiteline. I'm a licensed real estate broker and realtor here in Silicon Valley, California. I've been doing this since 1988, so it has been a very long time. I've seen a ton of different markets come and go, and this is definitely an interesting shift. And there are absolutely different elements at play, but I have to say this feels an awful lot like 2006, 2007. Just going to throw that out there. I know that if it were a YouTube video title, right, it would be the clickbaitiest of titles. But man, there's an awful lot. And what's interesting is so much of the numbers that pundits avoid or don't use exactly comparable numbers to say, oh, no, it's very different from last time. Well, I'm not sure that it is. And for those of you who were sort of into real estate back then, and I know I have quite a few folks who watch this that are real estate agents. For those of you who were around in 2007, 2008, and 2009, well, obviously 2008 and 2009, 2006, 2005 is probably the sweet spot of it hasn't happened yet, but it's coming. The switch that we're seeing, the change that we're seeing in data right now for our markets is a mind blower. So we're going to take a look at that. Another thing that I have changed, not because I really wanted to, but because I had to, was how I aggregate real estate information. This is a one of my daily routine is going through tons and tons of real estate news hits for my market, or things that would hit nationally, right, that would affect you and me and everyone else in the country. And that tool has gone away. So I'm trying to embrace a new one. So I'm using one today that I'm trying out. We'll see how well it works for us. You won't see it, right? All you see is the output, is the apps or the news items that come out. But that workflow, you got to keep that workflow smooth, or you're wasting time. And time is valuable. So we're about 10 minutes away from kicking off the show officially. Let's see. It looks like we've got, I didn't even really check on the other places here. Usually this gives me an option to, it looks like we've got at least one person. I don't know where you are. It's telling me I've got at least one person here. Feel free to chime in on the chat. For those of you who are new, I will see your chat, and I will respond live in the show. So it won't be so much me typing, it'll be me speaking. But I do try to keep an eye. I've got two different things I have to keep an eye on to make sure to keep up with chat. So I apologize if there's a delay between you asking your question and me replying to it. So let's see here. Yeah, it looks like we've got someone on YouTube. So welcome. We're about 9 minutes away from kicking off the show officially here. So this is an opportunity to ask any questions that you might want. that might not be specific to the content or whatever. Just an opportunity for us to have kind of a casual conversation about whatever's burning deep in your soul. Okay. So we'll kick that off. I do not have coffee yet in my hand. I was dealing with software things this morning, and I ended up door dashing coffee, but it says it's not going to arrive till after we've started. So I'm not sure I'm going to get to have any. For those of you who are interested in what the coffee is today, it's Peet's. It's a Peet's Mocha, which is my jam. I hope you've got your favorite hot beverage with you. I do have a little something with me. It's the daily electrolyte fluid, just to keep the healthiness healthy. I'm not sure it's going to be a busy day today. An interesting thing, there was an article I saw about this, that there's been this huge surge in sellers, and I suppose there's been a surge. I'm not sure I'd describe it as huge. I've got a listing meeting with someone tomorrow, but really the average number that I get is still pretty much the same. I haven't seen a huge jump. What's interesting is one thing I like to track is where I'm getting calls from. And one of those places is sort of the northwest bay. So more up towards, say, Palo Alto, Redwood City, a couple from Sunnyvale, Santa Clara. And the same trend has been true that we've talked about before, where these are folks that, for the vast majority of them, are looking to leave the state. But what's also interesting about that is and you might assume that for someone who's on the retirement path, right? They want to maybe move someplace that's a little bit less expensive. But for folks who are retiring, one of the main things is being close to family. At least it always has been historically. But what I'm seeing is folks who want to leave the state entirely, despite the fact that they'll still have family here, which is an interesting change. There have been times when I've had folks reach out to me directly because of different things that have come out of Sacramento, right? There was a big surge a few years back when the state started talking about providing free health care to everyone in the state, regardless of residency status. And when you did the math on how much that would cost, it would require a gigantic increase in taxes in the state. So I thought that was an interesting one. But I had folks, in fact, a client jumps to my mind. Literally, they called me. I heard I was watching a news report, saw it, and they called me literally within 24 hours and said, hey, we're looking to sell our house. We want to get going as fast as possible. And I started having a conversation about their motivations, and sure enough, it was the announcement that that the state wanted to provide this healthcare scenario. And what was interesting was they said even if they don't end up doing it, right, even if it doesn't pass, it indicates a willingness to sort of throw money at things that it's just irrational given the amount of money it would cost. So, and those folks ended up moving to Idaho. And the two biggest destinations there have been Coeur d'Alene and not so much like right in Boise, but a lot of the suburbs of Boise. A lot of folks trying to take advantage of proximity to the beautiful mountains in Idaho. And of course, the Coeur d'Alene folks for the water sports and all that kind of fun stuff. All right, folks, we're about 5 minutes away from kicking off the show officially. I'm really happy that everything's worked. I've changed so much of the technology in what I'm using. The only thing that's the same is the streaming software, so the graphics have all stayed the same. But man, behind the scenes, a whole bunch has changed, and I'm just glad that it's working. Yay me! I'm glad I was able to make it work. If you've got any questions about specific markets, we can do that. We can actually do some searches live. I've got a great tool that I use for that stuff, which, you know what, I actually didn't even open the window to that. I'm glad I thought of that because I have a hunch we may want to check that out. Let's get it all queued up here for Santa Clara County. There we go. Excellent. Excellent. Yeah. In fact, it's already set to the last data I looked at, which is new listings, new listings are only up 0.2% from the same time last year. And home sales are way down. 2020 was lower, but we'll see. We have a Chick-fil-A here now. I think since the last time we spoke, Morgan Hill has gotten a Chick-fil-A that opened up, and not only have they opened up, but they're also up on DoorDash. So that's turned into a favorite of folks in this house. Let's see here. What's the monthly on that? All right, yearly's usually better. But yeah, anyway, so that's what's really weird is the response. There have been there's a weird contingent of folks who are super anti Chick-fil-A, which I don't get. The food's great, so I'm not real sure what the complaint is. I guess there's the owners of Chick-fil-A have a lot of very strong faith, and I guess that rubs some people the wrong way. I'm not if you've got a faith that you aren't forcing me to engage in, I don't have a problem with you. So I don't know. Believe whatever helps you get through the day, right? Every day is a challenge, and whatever helps you get stronger and get through it, I think that's a good thing. So, but man, then there are people who what gets them through the day is really complaining loudly about a lot of different things. So if you belong to any of the neighborhood focused sites, I guess Facebook is even sort of in that category, right? But any of the ones like I forget what it's called, nextdoor.com is one that jumps to mind. We had a couple of interesting community posts yesterday from someone who just realized what a horrible idea it was to post some of the crazy stuff they were putting up there and deleted it within an hour. But it was stuck in my feed, so I was one of the lucky ones who got to see it, and I kind of felt sorry for him. All right, we are a minute away before we start the exploration of this interesting data. And we can talk more about, well, we don't have to really talk about it. I've been doing this for years now, but the reason we do Santa Clara County all the way down to Gilroy is just so it's a market size and helps you to focus in, right? So Santa Clara County is gigantic, made up of giant markets, and San Jose being the biggest market in Santa Clara County. But also what's interesting about San Jose is within it, the submarkets within San Jose are so diverse. It's an interesting market to have grown up in. I mean, I went to Lynbrook High School, which is in extreme West San Jose, and then I went to San Jose State University. So I've been here. I was born and raised here. So it's been interesting to watch it evolve. But in some neighborhoods that were horrible, that became the most amazing neighborhoods that you'd ever want to live in terms of desirability. So it's interesting to watch it all sort of evolve. 5 seconds left, and then we're going to kick it off. Thanks for joining me. It looks like we got a couple of folks who've decided to check in. Hello, everyone, and welcome. We are officially kicking things off. It is 10 a.m. on the third Saturday of the month, and you know what that means. That's right. Time for coffee and real estate live chat with me, Robert Whitelaw. I'm a licensed real estate broker and realtor right here in Santa Clara County, and I have been since 1988. That is a very long time, and a lot of different markets have come and gone in that time. And we are seeing what I think will be considered another pivot market. And we're going to explore those numbers together today. And I want you to feel free to ask any questions. Feel free to check out the chat. We've got that up and running. I should be able to see it. If there is a small delay between when you ask your questions and when I answer it, I apologize. The screen with all the data is over here, and the screen with the chat is over here. So just bear with me, and I will absolutely get to your question as quickly as possible. Now, there's a variety of ways to get in contact with me. If you do have any questions, or if you're watching this as a replay and not live, you can find me at soldbyrobert.com. That's the website that's got all the tools that I make available to my buyers and sellers. And it's also where I tend to post content. And for those of you who watch this, who also have been listeners to my podcast, I am once again apologizing. It has been, I think, almost a year now since the last podcast. I do intend to kick things back off and start doing that at least on a weekly basis. And I apologize that I haven't. Just time constraints just haven't made it possible. I took on some other things. Those things are now coming to an end. And hopefully you'll see that pop up. So you can find the website. Go to soldbyrobert.com. There's a link right there to the podcast, and then you can see it in iTunes. You can see it on iHeartRadio. It's syndicated throughout almost every tool out there that you can get access to vidcasts and podcasts. So, all right, let's go ahead and kick it off. We are going to start off as we always do by analyzing the data. Let's see here. And as always, we're going to start with what the active listings are. And just to calibrate you, this is what has happened from year to year, right? So in other words, we're comparing the month of May of 2024 to the month of May in 2025. That's the best way to look at the numbers. It eliminates any seasonal variations. So you're comparing as closely as possible, apples to apples. So, and when we look at the total number of homes on market, the way to consider that number is to think of it, if you're a seller, it's your competition. If you're a buyer, it's how many homes on the shelf were available for you to buy. Now, in Santa Clara County, this number is up 44%. That is a giant jump, and it's also something that's been consistent in terms of the growth of inventory over the last few months. And we started talking about this, I think we first started suggesting that this was going to be a thing in December because we saw a few interesting market things happening then. And it absolutely has. I think January was insane. I think we had a 50-something% jump in January for the Santa Clara County marketplace. But last year, this number stood at 1,615 homes on the market. This year, 2,329, a gigantic jump. And given the large sample size of the county, I mean, these are very reliable numbers. Now, next is San Jose, where we had 757 homes on the market last year, 1,161 homes in May of 2025. That is a 53% jump from the same time last year. That is just phenomenal. And it means that if you want to just put this in a primary bucket, just put it in the supply bucket. Because remember, for those of you, if you remember econ class in high school or college, supply and demand is the thing, right? That's what defines markets. And in Morgan Hill, we had a 44% increase as well, just as we did in the county. 73 homes last year, 105 homes this year. And in Gilroy, we had a 51% jump in inventory. 78 homes last year, 118 homes this year. And let's see here. Next, let's go ahead and take a look at new listings. This is in the month of May, how many people decided to put their home on the market, and it showed up in the multiple listing services and all the various websites. So it's up 6% in the county overall. Not a huge jump. If you read some of the national headlines, apparently they're seeing a huge jump. We're not seeing it here. We're seeing an increase, which is definitely a contrast to some other numbers that still make it the supply growing. But 1,825 homes were added to the market in May of last year. 1,935 homes were added to the market in Santa Clara County in 2025. San Jose is up 10%, 904 last year, 997 this year. And again, that's a 10% jump to the same time last year. In Morgan Hill, the new listings is down. So the number of people who decided to list their home in the month of May declined in Morgan Hill to the tune of 27%. 84 folks last year, 61 folks this year. Gilroy is up 32%, 59 homes last year, 78 homes this year were added to the real estate market. Next, let's talk about how many homes were sold. Now, this is where we want to try to remember the numbers we've just talked about in terms of how many homes did we add versus how many homes did we subtract, right? So it's down 22% from the same time last year. So at a time when we have inventory rising, we are seeing a decline in the number of buyers who step up and purchase. So last year it was 1,344. This year it's 1,055, again, a 22% jump. In San Jose, the number of homes sold is down 27%. 660 homes sold last year, 479 homes this year. In Morgan Hill, home sales down 36%, 47 homes last year in the month of May, 30 homes this year in May of 2025. A wash in Gilroy. In Gilroy, we saw the same number of homes selling this year in May of 2025 as we did in May of 2024. So across the board, we're seeing negative with one wash. But here's what we like to think about when we're at this slide, and that is how much did that add or subtract from the overall homes on market, right? So in Santa Clara County, we added 880 homes. In San Jose, we added 518 homes to the inventory. In Morgan Hill, we added 31 homes. And despite the fact we just had a flat performance in Gilroy, we still added 45 homes to the marketplace. So I think that that's an interesting indicator of where the market's at. Now, next, let's talk about how many months of inventory do we have. And to sort of explain this one, when we talk about months of inventory, it assumes, let's say we take the numbers for May and we freeze the number of homes sold and we freeze the inventory. How long would it take to sell off that inventory if those numbers all stayed the same? Now, what's interesting is 4.5 months, 4 to 5 months is considered a balanced market. And we have not been anywhere near a balanced market for years. But boy, are we charging towards it over the last few months. So in Santa Clara County, we saw an 83% increase in the months of inventory. 1.2 months last year, 2.2 months this year in May. In San Jose, a 118% increase. 1.1 month of inventory last year, 2.4 months this year. In Morgan Hill, we saw a 119% increase. 1.6 months last year, 3.5 months this year in May of 2025. And I guess we could say the winner of the highest months of inventory number is Gilroy with a 50% increase, 2.4 months last year, 3.6 months this year, which is just, it's another way to get a read on how little demand there is, right? As the demand tends to decline, we start to see numbers like this increasing. So it's just another way to get a little bit of a handle on the overall activity of what we're seeing. Now, let's take a look at how many homes went pending or contingent in the month of May. Now, what this means is a seller accepted an offer during the month of May. So it went pending or contingent. Contingent is usually the first step because there's things the buyer wants to check out, do inspections, that sort of thing. And then at some point it goes pending, which means there are no more contingencies, or at least it should mean that there are no more contingencies in line for that particular purchase. So this is both of those occurrences kind of muxed together. Now in Santa Clara County, it's down 9%. So this means fewer homes accepted offers in May than the same time last year. Or translated, it simply means buyers made fewer offers. So it was 1,309 last year. It's 1,196 this year. In San Jose, the pending contingent homes was 636 last year, 587 this year, for an 8% drop overall. In Morgan Hill, we saw 48 homes go pending or contingent in the month of May in 2024. In May of 2025, we saw 42 homes in Morgan Hill go to pending or contingent, and that's a 13% drop from the same time last year. And Gilroy, again, a wash. 37 homes last year, 37 homes this year went pending or contingent. Let's see here. Next, let's take a look at original list price. Now, I like to use original list price. I don't know any other agents that really do. But this is for all the homes that were listed in the month of May. What was it listed for right on that first day? So this is before there have been any price changes. It had the prices before the price has been raised, before the price has been lowered. This is what sellers expected for their home to sell for, or hoped that their home would sell for. Why do I care about this number, and why should you? It's a little bit of a look into the psychology of where sellers' heads were at, right? What were their expectations? And I just got a ping that my coffee's here, so I'm going to take just a second and go grab my coffee. Hold on. Sorry about that. But now it can be coffee in real estate because I have my coffee. I do love this stuff. You know, an interesting thing would be how many people who started off as Starbucks people became Pete's people. Because I'll be honest, I didn't like Pete's the first time I tried it. But it started to grow on me. So there you go. All right. So average original list price. So this is just a way to get a feeling for where people's heads are at. And it's a great thing to check and think about, well, how much higher are expectations this year than they were last year? And what's interesting is this number is actually pretty mellow. Typically, particularly in Morgan Hill, sellers expect to get a whole lot more for their homes year over year. But let's just go ahead and run it down. So last year in Santa Clara County, the average original list price of a home was $1,991,023. In May of 2025, that number was up to $2,018,388 for a 1.4% increase. So not as big as some of the other numbers we see. And you may still be thinking, God, we're talking about $2 million here, Robert. Why do you think that's quote unquote normal or not as crazy? Well, because in the past, I've reported this number where that number was up 10%, 15% in some cases. So it's an absolutely crazy market, or has been a crazy market, reflected by numbers like this, where we were seeing double-digit increases. San Jose, see, and the reason why this is important is because this shows sellers are getting better calibrated. Now, I don't know if we can attribute that to real estate agents being more intelligent in how they're advising their clients. I'm a little dubious of that one, but hope springs eternal. Maybe there's been a sudden surge in agents who aren't really bad at their jobs to advise their clients. But in any event, only 0.8% jump in San Jose from May of 2024 to May of 2025. So it was $1,497,000 last year, $1,509,000 this year. And of course, remember, in San Jose, as I said, and in the county overall, huge variations there. Right? There are definitely neighborhoods that are just beloved and people want to live there. And it's like when I first started in real estate, and I started in Mountain View. And I hadn't even graduated college yet, and I had gotten my license. And boy, there were folks who wanted to buy who had to have a specific zip code. It had to be in Palo Alto. Even if it was a house where the foundation was moving 5 different directions. It was all about the prestige of the address, which was huge then. The office I worked for also did a ton of business in Los Altos and Los Altos Hills, where let's be honest, that's sort of the Beverly Hills of Northern California, I think. I think that's a fair assessment. But anyway, I digress. Sorry. So that's San Jose. Morgan Hill. I don't know why I'm in the mood. I am in a distracted by the shiny thing mood today. I don't know why. But I apologize. All right. So Morgan Hill, up 1.6% from last year. $1,580,709 in May of 2024. And $1,605,653 in May of 2025. So not a huge jump. Super reasonable. Well within a negotiable margin in terms of people potentially ending up getting less than what asking prices tended to be a year ago, right? We're in that range on all of these, with the exception of Gilroy. Now, remember, Gilroy is a much smaller market, so these can be skewed. And I think in this case, the majority of that is that it is skewed. So if one very expensive property gets listed in a town like Morgan Hill or Gilroy, it can very much skew. The word I used was skew. These numbers. Last year, $1,295,568. Last year, for an 11.7% jump. This year to $1,447,550. There was a listing in there that was a little bit more. So if we were to adjust it, if we were to just massage the number a little bit, I think that would be a little bit closer. But I wanted to deliver the numbers to you as they are, unless there was an error. Right. One thing I'll do, particularly in Santa Clara County and San Jose, is frequently that very first time the home is listed, The real estate agent fat fingered it. Instead of putting $1.2 million, they put $12.0 million. And the system just sees that as the first number. So anyway, but I correct for that when I present these ones because those are obviously just errors. All right, let's move on to the next one. Is there any other peripheral data I wanted to share with you on that one? No, the next one's kind of the sweet spot one. This is sales price. So this is what the home actually sold for. And we can see in some cases we've got declines where not only did they not meet expectations, but they came way below. So, but let's start with Santa Clara County. So last year, the average sales price was $2,030,000. This year, in May of 2025, that number stood at $2,128,000. That's a 4.8% jump. But in terms of expectations, where did that leave us? So expectations were actually exceeded in Santa Clara County to the tune of $110,000, right? So overall, people are still getting more on average than their expectations were set at. In San Jose, this number's up 1.7%, where the average home sales price last year was $1,592,246. This year, $1,619,663. So overall, again, folks in San Jose on average were getting more than they expected in the month of May. Because remember, San Jose expectations were about 1.5 million. In Santa Clara County overall, expectations were 2 million. So we've exceeded those, but we exceeded it by almost the same. $109,705 is how much it was exceeded in San Jose. Not so much in Morgan Hill and Gilroy. And the reason why I'm kind of pausing on this slide is because I want everyone to think back. So I have been doing data like this since 2007, January of 2007. Started with the podcast, and I would share, and it was an audio-only podcast, but I would share all of this kind of data. And the reason why I have been saying that things today feel very similar to the way they did in 2006, 2007 is because of this. And what is this? This is what I call market performance creep, or just market creep, where we start to see things that are going to get big happening first in Gilroy, Morgan Hill. Gilroy particularly. It's also one reason why I track markets like Phoenix and Las Vegas, because those are markets that when things tend to go bad, if it's based on broader market influences, there's a good chance we're going to see it here. Phoenix is getting beaten to death in its real estate market. The declines are ridiculous. And we're seeing similar things here. So short of expectations, these in terms of comparing it to last year, down from last year for both Morgan Hill and Gilroy. Morgan Hill is down 0.8%. I think I already gave you the numbers. It was $1,516,000 sales price average last year, $1,503,000 this year, for a short of expectations. In other words, sellers got less than they expected to the tune of $102,000. Gilroy, last year, $1,240,000 average sales price. This year, May of 2025, $1,225,000 for a 1.1% decline, but it's $221,000 below expectations. So sellers in Gilroy were expecting an amount, and they got $221,000 below that amount on average. That is a big deal. Now, for some of you, you know that I am in the buyer seat right now. I am looking to find a new property. Some of you may also remember that the reason for that is because I liquidated my holdings in Hawaii, apparently just in time, because that market has started to crash, based on just a basic fundamental lack of property rights being respected by the county and state. So I'm out. And, we could do maybe the first podcast. Maybe the first podcast will be these thought processes. What should you be thinking when you're thinking about making an investment in real estate and where you are and are not going to do it? But anyway, So that's where we're at. This is one of the ones where, in addition to the other things we've discussed, I think this is a pivotal bullet point for you in your thinking process of what's going on with our local markets and where are we going. Because if history is the prelude to where we're going, I think this is a big bullet list item for that. Okay, next. Let's look at percent over and under asking price. So this is how much people are paying above asking price, and people are still paying above asking price. But remember, that's kind of the way these things happen. It isn't usually the flicking of a switch and the market goes bad and suddenly no one's getting their asking price. Right now, there are tons of areas in our markets in Santa Clara County where you can go in and get below asking price. Absolutely. It's a moving target based on neighborhood. But these, and even Morgan Hill and Gilroy, that are smaller communities, absolutely have submarkets that are ridiculously popular, that are going to have very different numbers, right? But we're trying to get a broader 10,000-foot view here. So first of all, yes, we're way off from where we were last year. Check it out. So in Santa Clara County, we've seen a net 4% drop in percent of asking price. And this, keep in mind, this is compared to what the price was at the time the offer was made. So while we were looking at original list price to get into the psychology of the seller, this gives us some psychology into the buyer, based on how much were they willing to offer above or below asking price at the time they viewed the home. So a quick illustrative example, buyer finds a house. It's listed for $1 million. But it was originally listed by the seller for $1.5 million. The math that's determining this is based off of that $1 million price, the price the buyer actually saw and was faced with when they were trying to put together an offer on this property. Okay, sorry, just got a message from someone via text who's watching the show and didn't do it in the chat. But anyway, we can discuss that later. All right, so down 4%, so 107.7, which basically means that buyers on average were offering 7.7% over asking price a year ago. This time, this is down to 3.7%. So they're still getting over asking price, but they're getting 3.7% instead of 7.7. In San Jose, the number was even higher last year in San Jose. It was 108.1, which means 8.1% above asking. Down 4.8% this year. 4.8 specific points, right? Not a percentage of the previous value, but the actual percentage points that dropped. Down to 3.3%. So what's interesting is the dichotomy here, right? So above asking price in Santa Clara County overall is higher than San Jose is, but a year ago, San Jose was actually getting more over asking price than the county overall. Definitely an interesting shift, but again, a 4.8 delta. Morgan Hill, 102% last year, 100.4 this year, down 1.6. Gilroy, 102% last year, 100.5 this year, down 1.5. And basically meaning they got more or less asking price. And because of the sample size, I'd say that 0.4 and 0.5 would be well within the margin of error. But definitely areas where you could get aggressive with your offering strategies and hope to be able to secure a home. It shouldn't be too much of a mystery when you as a buyer are going to look at these properties and your agent has a conversation with the listing agent. There's going to be enough information back and forth where you're going to get an idea, and you're already going to know. I mean, you should. Your agent should know this is a high desirability neighborhood. This is going to be one of those neighborhoods where it's likely going to go for a little more. But man, I'm even seeing interesting data that's coming out of Northwest Gilroy, near Christopher High School. Super great neighborhood, fantastic school. Christopher High School is probably the best high school, non-private high school in the South Valley. My next door neighbor happened to be the principal there for a long time. There was a period of time where I was considering moving to that neighborhood just so my kids could go to high school there. Because as for those of you who don't know, Morgan Hill is a little challenged in its high schools. We have had some very dubious distinctions in terms of news items that have floated around of things that have gone on in our high schools, which is one reason why my kids ended up going to a private school here in Morgan Hill. But anyway, so that's the layout. And this trend is increasing in terms of how much closer and closer and closer we are getting to just getting what asking price is. And it wouldn't surprise me if we see things go even lower. And the numbers we're about to cover, I think, paint an even more interesting story in terms of what we can expect. So let's go ahead now and jump in. The next number is going to be days on market. All of these heading in the direction that you would expect. Some not as much as others. Let's see, Santa Clara County, 14 days to get a home sold. And let's also calibrate to the reality. 14 days is selling on the day it lists. All right. The reason I say that is because the vast majority of real estate agents, when they list their home, when they list your home for sale, they're going to say, we're not going to consider any offers until such and such a date. And that is usually 10 to 18 days after it originally goes on the market. I like to set up a listing where I'm going to have at least 2 open house weekends prior to accepting offers. Why? Because I want to make sure as many eyeballs get on that property as possible. And when the market was crazy, even though that would be stated in the listing, both in the multiple listing service and on Zillow and everywhere else, I would occasionally get people who would come in and offer just way above asking price just to sort of derail that whole process. There was only one instance where my sellers decided that was an okay thing because I think they offered, I think we were at 11% over asking price from their offer, with no contingencies, all cash kind of a thing. It was that period of time when frustration had hit so many buyers. They said, screw it. We need to get in there. And in the conversation with these buyers later, I found out they had made 20 something offers on properties that got declined and they were just done. So they assembled all the cash they could. They sold all of their stocks and all of their stuff and, decided they were going to come in and they knew all the elements that made an offer super attractive and went with it. And my suggestion was that we wait for the full 2 weeks, but my sellers decided to go for it. But it was a great offer. And I'm sure that house is probably worth quite a bit more now because that was a few years ago. But anyway, okay. So the point being, if you see 10 to 18 days, consider that more or less a wash. It's really selling super soon as we go through these numbers. 18's on the outset, but all right. So 43% drop in Santa Clara County, 14 days to get a home sold last year, 20 days to get a home sold this year. San Jose, 14 days last year, 17 days this year for a 21% increase. Morgan Hill, 24 days last year versus 37 days this year for a 54% increase. And that 37 days, that's a real thing. And what's interesting is that the increase in this number really started February, March of last year. In terms of sort of a trend of the market getting a little tighter in Morgan Hill. Gilroy up 100%, 16 days last year, 32 days this year in May of 2025. So just a dramatic jump in how long it's taking folks to get sold. Interesting that, and here's something to think about in these numbers. Because a lot of times people will say, well, if we see this number dramatically increase, that means the market's getting worse, right? No, actually, because think about it for a second. Right now, the only homes that are selling immediately, and this low number that we're seeing for San Jose, for instance, I think falls into this category. We have so many homes in the market right now that the ones that are tending to sell each month are some of the newest, best in class listings. So what would be interesting, and maybe I'll do a slide next month for this, is what is the average days on market for all homes currently for sale, regardless, right? Not just solds, because that's what this is. This is how long have homes been on the market that have sold. Because what you're going to see is some of them have been on the market. This number will be way higher, right? Because we're not selling off the old inventory. Only the newer inventory is tending to sell on a month-to-month basis, which is resulting in numbers like this. So if we start to see a month where suddenly all of these days on market statistics jump, I'm going to be willing to bet you that is coincidentally also with a dramatic jump in sales, because that's the only way that this number would grow like that for a data point for homes that have sold, right? Okay. Next on the hit parade, let's take a look at, now we're switching gears. We're no longer looking at year over year. We're looking over our shoulder to get a feeling for what's the trends? What are we seeing as month over month? In Santa Clara County, the first one is total active listings. And check it out. It kind of went flat there. We're at about this, kind of in the same neighborhood as we were in April. If we look at the same time last year, we can see that usually this is a peak. But what it looks like is that we hit the peak early and have simply held it from last month to this month. If we look at 2023, which was a weird year, for a variety of reasons, but it was really relatively flat with a little bit of an escalation that was building up from April all the way until September of 2023. But the thing that we're seeing here happening in 2024 is a lot more common in terms of past markets and past years that we do for evaluating the market. So flat, a little weird, a little different. And note that there's not really a decline. It's going to be interesting to see June, and nothing that's currently that I've seen happen in June so far has suggested to me we're going to see a dramatic shift back to being a seller's market. Remember, June historically is considered the best month to get the best price on your home, typically. Not sure that's going to play out this year. Next, let's take a look at new listings. New listings, what's consistent about past years? You peak in May on new listings, right? Check that out. 2023, 2024, new listings peaked. We peaked early, or instead of saying peaked early, we stalled in May. If it had been a normal year, we would have expected a continuing rise. And notice the dramatic decline. See, and compare that to active listings, where we don't see a decline in active listings. So sales weren't enough to damage it and keep up with it. And the dearth in sales didn't even overcome what we saw in terms of new listings, giving us a flat overall total active listings number. Does that make sense, or did I just confuse everybody? My point is, if we saw this much of a drop in new listings, we didn't see that affect the overall inventory. Right? And you would expect that, because you would expect the drain of inventory to at least make that number, the total number, the blue line, go down, but it didn't. So we listed less than we would normally have expected given last month's performance, but we didn't sell as much as we listed, so it propped up a continuing inventory that is at a high level, right? I hope I'm not confusing you with the way I'm phrasing that. Next, let's take a look at total homes sold. Again, we normally peak in May, and we didn't. We peaked in April, unless there's going to be a dramatic jump for next month. But look at that. In the last two markets, we peaked in May, but we didn't this year. And instead of thinking of it as we peaked early, we stalled because we didn't see it happen in May. Next, homes that go pending, we can see it went up a little bit compared to last month, but really if you sort of average it out, it's been flat since March. Usually, again, we peak in May with a steady uptick to that point, and no, there's no steady uptick. It's been flat or lower the last couple of months, with fewer people making offers. But it was up from last month, about the same as March, but definitely down from past years as we saw the numbers overall. Now, how do we predict? Where would we expect to go from here? If we expect that the market has hit its peak early, meaning last month, or meaning we're just not going to get that peak that we should have gotten in the month of May, look at it. I mean, look at 2024. Everything from here should go down. And my guess is the one thing that won't go down will be inventory. It was not going to surprise me one bit if we see inventory just stay flat for much longer or even continue to increase. All right. And in terms of new listings, look at how much we get a dramatic drop in new listings from its peak. I just don't see a whole bunch of folks coming out and selling. Now, what could change that? If it becomes more of a common concept that we're heading into a downturn where home values are going to go down, you could see sellers accelerating plans to sell to take advantage of that now, instead of potentially having to try to sell in a more down market. That would be a pretty big shift. I see it as possible. I don't see it as possible in the near term, though. We're just not seeing numbers that are going to freak people out. When we start seeing homes selling for below asking price on average, that might be the turning point that gets people thinking in those terms. But right now, I don't see anything deviating from kind of what we already talked about here. Next, this is Santa Clara County list versus sales price. Always interesting to see when they switch. We can see that average sales price is above average list price. So folks are still on average in Santa Clara County getting more than what expectations were for that month. So they don't seem to be converging. They kind of crossed over in March, and I think April and May have seen them just sort of staying right next to each other. We'll see if that changes. If they're going to change, June would be the month where you would see a boost in how much folks are getting. So we'll see if that plays out. So far this month, the data, and we're on the 21st, so we're getting a lot closer to the end of the month than being close to the beginning of the month. And I'm not seeing data that shows me a huge change in direction for this, but we'll see how it all goes once the month is done. Next, let's take a look at percent of asking price trends, see where we are. We can see we're 103.7 overall, but down from February where we peaked. And if we look at past Mays, right? So here's May right here. The expectation would be that we continue down until July, and it flattens in July. And if we look at May back here, this was, again, a weird year. May was funky. We normally see this stuff dropping in the winter and then a boost in January. So we'll see how this goes. But the feeling here for me is that this is going to continue to go down. It continues to go down in past months. So this would be May of last year. So I would expect the next 2 months to see a decline here. Given what we're seeing in inventory numbers, it wouldn't surprise me if we see a bigger decline. And I'm hesitant to make a call on this one simply because last year it absolutely looked like we would see. It looked like for winter of 2023, 2024, I thought we would go below 100%, and we didn't. With the lowest we got was 3.5% over asking price. But we are already at winter numbers in summer. So if we see the same number of decline, it wouldn't surprise me if we see things below 100%, so that on average, folks are selling their homes for below asking price. But only time will tell, and of course, we'll cover that. Next, days on market. We can see we've had a pretty big jump in April, between April and May. April and May typically are not time frames when you see this number jump. It tends to be flat. You tend to see days on market going up from May, and we're already going up now. So my expectation is that, as we have seen with past years, and particularly 2024, we'll see this go up, and then it'll peak in the winter months. So there's no telling where this number could go, but you can see what the trend is, right? It tends to peak in winter. It tends to be down in summer, and we've already seen an increase in May that I think it hasn't been seen in our market in a very long time. Next, let's take a look at properties that have had a price reduction. And these numbers, again, this is the third or fourth month where this has been a trend of dramatic increase from the same period last year. So in Santa Clara County, last month we had 23% of the homes on inventory in available for sale had a price reduction. This month, that number went up to 26%. That's a 71% change from the same time last year. In San Jose, last month's number was 22%, 29% for a huge increase, the biggest increase. So the largest number of homes that had a price reduction was in San Jose. That's an 111% increase from the same time last year. In Morgan Hill, 27% last month, 27% this month. So a wash month to month, but still an 87% increase from the same time last year. Gilroy, 22% last year, 25% this year. It's a 50% increase from the same time last year. So the message to take from this is sellers have gotten to the point where they are entertaining the option to reduce their price because they're just not getting the attention they need. They're not getting any offers. But also, if you are a buyer, be willing to offer below asking price, because over a quarter of sellers, and in San Jose, almost a third, are willing to entertain offers that are below asking price or are mentally prepared for it. Now, I think the number who are willing to take below asking price offers is much higher than this, but we can see that there's a good substantial chunk who are already in that mind space where they're like, okay, we have to get into price reduction. So just something to think about as we go through these. Now, that covers the numbers. Let me switch us over now so that we can take a look at what's going on with data. So here we are. This is Reventure. This is an app I use on a pretty regular basis to check things out. And this would be a great opportunity for us to kind of take a break, enjoy a little coffee, and entertain any questions from those of you who are watching. I see we've got, sorry, there's a window hiding that number. Looks like we got 2 folks currently watching, although that's not all platforms. So it could be more. But if you've just joined me, feel free to ask any questions you might have. If there's a specific area you're interested in, we can actually absolutely look at it, right down to the zip code. But something that's interesting here, this is, I wanted to show you this particular page because this is for Santa Clara County overall. And the home price forecast is down. It was down a little bit last month, but I think it was down like 0.0 something percent. This is the first time it's been like an actual real number, like 3 point something. And I find that very interesting. Now, the source here is Redfin, but remember, Redfin, just like Zillow, Trulia, and many other sites, is an aggregator. So they get data from the MLS. Their listing system is fed by the MLS, and whatever customized information that a real estate agent might put directly on the site. But this is interesting. This is where they think that home prices are actually going to be going down. Here's the for sale inventory, and this is, again, year over year numbers. In terms of for sale inventory, look at that. We're creeping up on a peak that happened in 2019. The amount of inventory growth, look at that, back 2019. Let's see, price cut percents. Look at that, 20.9%, 624. So let's see here. Is that the total inventory number? Interesting. Okay. Let's see days on market. I wonder if this is going to be only for homes that have sold. Okay. That's interesting. All right. You know what? I think I will. Maybe for next month, I'll go ahead and pull that data myself. I feel like my MLS data is frequently a little bit more on the mark than this stuff is. But if you've got any questions, feel free. I'll be happy to cover this for you. In terms of other news items, Fed leaves rates unchanged as more officials predict no cuts this year amid economic uncertainty. We could just read this whole thing, but the bottom line is I think that there's concerns about tariffs. One interesting thing is, I guess tariffs have now brought in $55 billion, which is way more than Congress expected. So I suppose that's good news. If the point of doing a tariff is to bring more revenue into the country, then it sounds like it did that at least to a level that exceeded expectations. Next, the June 2025 housing market update, the biggest shift in decades. I don't disagree with that. This is actually a podcast that the folks at Bigger Pockets do. Let's see. Homes are selling for under asking, and I'm sure it depends on what market you're looking at. We're on our way to a housing market crash, correction, or a much-needed reset, which would return us to the quote-unquote normal housing market many of us have been asking for over the past few years. That's a question. Best and worst markets, mortgage rates, etc. One thing I wanted to point out that they bring up here is mortgage delinquencies are rising, which could spell trouble. That's also one of the things that led up to the ultimate bad things happening in 2007, 2008. The more that number goes up, the worse things get. Let's see here. Reduce your risk. Plus, we will see interest rates reverse with good inflation data. Yeah, we'll see. I mean, and usually, with the inflation numbers having gone down, we would have expected interest rates to go down as well, but they haven't. So, next, mortgage applications slipped despite lower rates. I don't know what the hell they're talking about. Rates have not gone down. Rates have been between 6.6 and 7 for a while. And I guess they're talking about that little teeny weeny little dip right there. And I am a guy who looks at these numbers every single day. So I would not categorize our current situation on June 20th which was yesterday, as interest rates are down. Were they technically down by an amount, maybe by point something, but not enough to spur any kind of interest in applications. Housing starts. So this is interesting. This is the one I look at. So whenever you look at news reports that talk about home builder confidence, don't even bother. I find that it's interesting that there's typically a contradiction between what the confidence level that's being reported is and what the actions are, right? Because there's no mystery, right? If you are confident in doing home building, then you're going to build homes. And there are measurable things that you have to do to build a home. You got to get permits. You got to start building. You got to buy lumber, right? So while there are other reports that housing, that confidence is up or down or whatever, this is where you want to look. The market focuses most on building permits and housing starts, with the latter representing the beginning of actual construction. Total starts fell by nearly 10% to an annual pace of 1.256 million, down from 1.392 in April. So one thing to keep in mind is they're talking about month to month. Don't pay attention to that. You want to pay attention to the year over year, because there's tons of influences relating to the season that you're starting construction. The decline was almost entirely due to a sharp drop in multifamily starts. We've talked about this before. We were oversaturated with multifamily starts. And I think and at least in my markets, I think we overbuilt multifamily. So I think it's good that has dropped. And I think it would be great to see single family starts edging up, which is what they did. They didn't edge up a lot. I'd call that more or less flat, only 4,000 up. But again, I think that's a good sign. See, and I don't know about your local market, but I think these are pretty common across the country in terms of where the emphasis has been. And that is really it. That's what I've had for you. I wanted to finish off with just showing you how to get to the tool that I provide to my folks who are interested in understanding the value of their home. Just head on over to soldbyrobert.com. You can go to selling and click on instant home value. You can also do it from just the front page. But here's what's interesting. You can enter your address and click check, and it'll just give you what it believes your home value is. One reason why I love this tool is one of the things you'll see with Zillow, Redfin, Trulia. Zillow and Redfin are the same thing. But what's interesting is, let's say you check a home's value on Monday, and it says $750,000 is the estimated value. Let's say that home lists that day, and the next day you go and check the value again, and the list price is $900,000. Magically, Zillow's price estimator will be at or above that asking price. Not this tool. This tool just takes actual data. It doesn't take the current asking price into effect. At least it doesn't seem to. It literally just gives you what comparable properties have sold for as the metric for what that home is projected to be worth, which is one reason why I think it's great. So, and it's not going to ask for your email address. It's just going to let you get access to that number. If that's all you care about, great. Glad I could provide that to you. Carry on with your day. Have a good time. But if you want the home value estimator to give you a monthly update, if you want the home equity tool, right, which will give you a rundown and give you an opportunity to explore details on those things. If you want home purchase options, how you can use the equity in your home to purchase a home, whether or not it makes sense to refinance. Notice this is red, right? And there's X's. It's telling you don't refi. Given what we know about your current loan, your interest rate, the terms, don't do it. If you decide, if all of a sudden this turns green, let's say interest rates make a huge drop and you could save money, you're going to be given an opportunity to learn more about this, and you'll talk to a local lender. I've created a partnership with a local lender for this right here in Morgan Hill. So he'll be able to set you up and talk about real numbers for a loan that could save you money. Mortgage summary, how much equity you've got, how much is going towards principal, how much towards interest, important options. Thinking of selling, you might have up to X amount of purchasing power. You could use X amount for something else. Net worth of home renting tool to do what ifs in terms of what if I wanted to rent my home or do short-term rentals. All of these tools available to you, all things I strongly suggest that homeowners are aware of and check once a year, all built into a tool that will give you the information every month. I think it's an amazing, fantastic tool. It just requires that you provide the email address so they can send that information to you. And I promise you're not going to get blitzed with all kinds of stuff. It's a great tool. It gives you the information that you need. And of course, if you decide you don't like it, you can unsubscribe. No hard feelings. I just hope it was worth it for the time that you used it. All right. That's about it, folks. I hope this has been valuable information for you. Again, my name is Robert Whitelaw. I'm a licensed real estate broker and realtor right here in Silicon Valley. If you have any questions about how to achieve your goals buying or selling real estate here in Silicon Valley, feel free to reach out to me. I'd be happy to help. You can find me at soldbyrobert.com. You can email me from there. You can get my contact information. You can set up a meeting. Whatever is going to be good for you, I'll be happy to try and help you out. All right. Thank you, folks. Hope you enjoy the rest of your weekend. It looks like there's some sunshine out there, so I'm going to go enjoy that myself too. I look forward to seeing you all next time for next month's Coffee and Real Estate Live Chat. Thank you very much.